and welcome back to DukascopyTV. Joining me in the studio today is Dan Day-Robinson, founder of the Global Training Group. Dan, thank you for coming in.
It's a pleasure.
Thank you. Now, first of all, could you tell myself and the viewers a little bit about the training group and what its main objectives are, please?
Yeah, Global Training Group is a company that I founded in November 2010 here in Geneva. Basically, Geneva is one of the largest trading hubs for commodities, and Global Training is directed at training and doing risk management consultancy for traders, bankers, and people involved in the commodities industry.
Excellent. Now, do you think there is a growing need for this type of training amidst the sort of global slowdown at the moment?
Yes, I do. Commodity markets are obviously crucially important. Primary commodities are the things that drive everything that we do. We eat commodities, we use commodities, we make things, we build things, and commodities are shipped around the planet. Of course, commodities are hugely important, and Geneva is one of the largest commodity trading hubs in the world. The Geneva Trading and Shipping Association, for example, estimates there are about 8,000 people working in commodities in the Geneva canton. So it's hugely important for Geneva, and training is, of course, crucial. One of the things that's probably most important is that because firms have grown here quite quickly and established quite quickly, there's a great need to train people, and not necessarily full human resources are available for that here. So that's one of the reasons why training is so important.
So what advice would you give to traders looking to invest in commodities at present?
Well, one of the great dangers is that we tend to talk about commodities sort of across the board, and I think the reason that's dangerous is because, of course, all commodities are very different. So while, for example, I mentioned that Geneva is a hugely important trading hub, what's happening in oil right now, and a recent rise in oil prices over the last month or two, may not be happening in other commodities. And so, although commodities are an asset class, and they do in general follow the trends of other asset classes in financial markets, it's quite dangerous to talk about commodities across the board. But what I'd recommend to traders is they look obviously at each individual commodity. For example, wheat or grain at the moment, threat of international drought all over the world is causing grain prices to be very firm. It's very important to look at each individual commodity rather than be too pressured by looking at commodities across the board.
Now, just for a moment to look at the shipping trade, global shipping Q2 volumes have been hit really very hard by the European debt crisis. Is this a trend that you think is likely to continue?
There's no doubt that over the last 5 years, perhaps a little longer, commodity markets have been under huge stress. We had, until the Lehman Brothers crisis, massive volatility in commodity prices, a huge rally, of course, which happened until that time. Then we had a slump. Then we had people talking about the financialization and over-speculation in commodities. Your question really about whether the euro, the problems in the Eurozone have really resulted in commodity markets being, if you like, damaged in the long term. I don't think so. I think that in general, obviously the crisis has had effect on world markets, but in general, the trend is for commodity prices to rise, I think. They're still relatively much lower than they were 20 or 25 years ago, if you look at them on an inflation-linked basis. And in addition, I just don't see, demand falling because, of course, the world population is growing. We constantly need more and more commodities. So, Eurozone crisis, yes, an effect, probably a short-term effect.
Now, on the other hand, wagers on commodities hit an 11th-month high amid speculation that China may take action to bolster its economy, and also amongst positive data from the US. Do you think this could be sort of light at the end of the tunnel, or what do you sort of make of these readings?
That's an interesting question. I think that, one of the things about China is Chinese policy is a domestic policy. The Chinese want to really keep control of inflation. They want to stop the economy overheating, but they don't want to dampen down demand too much. I would have thought that there is some light at the end of the tunnel for commodities. I think the Chinese will stimulate commodity demand again in the near term. I think from the point of view of the US, again, it's the same situation. Commodities are a primary indicator of, or commodity trade is a primary indicator of world economic health. Yes, I expect there to be an improvement, and yes, I do see light at the end of the tunnel.
Dan, thank you very much for your time today. It's been a pleasure speaking to you.
Thank you very much.
Thank you. Now, sadly, that's all we have time for at the moment, but click back to Dukascopy from all the latest market news and interviews from the TV team. For now, though, goodbye.